Welcome to the BuyBox Experts podcast. We bring to light the unique opportunities brands face in today's e-commerce world.
Hi, I'm James Thompson, one of the hosts of the BuyBox Experts podcast. I'm a partner with BuyBox Experts and the former business head of the Selling on Amazon team at Amazon, as well as Amazon's first account manager of the Fulfillment by Amazon program. I'm the co-author of a couple of books on Amazon, including the recent book, Controlling Your Brand in the Age of Amazon. Today's episode is brought to you by BuyBox Experts. BuyBox Experts takes ambitious brands and makes them unbeatable. When you hire BuyBox Experts, you receive the strategy optimization and marketing performance to succeed on Amazon. We also support investors with due diligence services. Go to buyboxexperts.com to learn more. Before I introduce our guest today, I want to send a big shout out to the team at Getita, a global leader in Amazon FBA auditing and reimbursements. Getita analyzes your Amazon data, reconciles your FBA inventory, and files claims for reimbursements on your behalf. Go to getita.com to learn more. Our guest today is Kelly Stojka, account executive with TaxJar, a firm that helps businesses of all sizes remove barriers to growth and compliance by helping firms manage their entire sales tax lifecycle, from calculations and nexus tracking to reporting and filing. Prior to TaxJar, Kelly held account executive roles at a number of software and services firms. Kelly, thanks for joining us today on the BuyBox Experts podcast.
Thanks for having me.
Let's start with one of the big turning points. A couple of years ago, the Wayfair Supreme Court ruling changed the way that e-commerce sellers were held accountable for paying sales tax. Since then, Amazon has made some adjustments around what sales tax services it offers FBA and third-party sellers, and clear responsibilities remain in place for those third-party sellers. Tell us more about what actually changed and what Amazon sellers need to continue to do to remain sales tax compliant.
Sure. So the common misconception that I see whenever I'm talking to customers or FBA sellers, they tend to think because of Wayfair, pre-Wayfair, they were having to charge and remit their own sales tax. They think now that Amazon handles that they're handled. Clean out of the picture, don't have to do anything. And the misunderstanding there is that although they're not collecting or remitting the sales tax, they're still required to pretty much report those gross sales with the $0 returns to the states where they have physical presences. Now, they might not be based in that state, but as we all know, Amazon has warehouses across the country. And so if their goods are being held in those states, then they'll have a requirement to file in them as well. So those are kind of some of the ways, as well as due to the economic nexus, so due to the volume of sales into states, they might also still be required to file those $0 returns, especially if they're multi-channel sellers. So if they're selling through other avenues, those sales can also go towards those gross volumes, towards those nexus thresholds.
I went through the process of actually filing paperwork on a shell account once upon a time, just to see how incredibly annoying and complicated this process was. I'd love to get a refresher from you on what does Amazon do or not do as part of its sales tax offering for third-party sellers? And where does TaxJar come in to help close the gaps between what Amazon does and what a seller needs to do to be tax compliant?
Sure. So they are charging and remitting the sales tax at point of purchase. So that's not actually going into the seller's hands at any point. Now, the thing is, the states are still requiring the gross sales to be counted on those returns. They still have to file, although the $0 tax return will be filed to the state, They still need to populate that with the sales data. And where TaxJar comes into play, especially with Amazon sellers, is where are those warehouses? Where are these items being stored? Where are they being shipped out of? Where do you have requirements to file? And we actually indicate that on their account where they're actually having those items shipped from, since we're importing that data in from their Amazon account. So that's probably the key requirement that I think a lot of folks miss is if they're based in California, they think, all right, I'm filing my return in California. Hands clean, I'm good to go.
Yep.
But the states can come after you, and they really do like to audit folks where it's those $0 returns because they know there's money on the table if they haven't been filing in a state where their goods are being shipped out of.
So for e-commerce sellers that sell in more channels than just Amazon, tell me a little bit more about what responsibilities likely changed as a result of Wayfair.
Sure. So with these marketplaces, Previously, they were having to collect and remit sales tax across the board for all of their channels because marketplaces didn't exist by the law.
Yep.
Now, a multi-channel seller, let's say they're selling on Amazon, they might have their own account where they're selling on an e-commerce platform. Now, on that account, they're required to collect and remit the sales tax. TaxJar can do those calculations. A lot of the platforms have their own calculators that they're actually populating that data.
Yep.
Now, with that in there, that can definitely add towards those economic thresholds, including those Amazon sales. And so that can actually push you over the finish line to have to go ahead and require to file in other states due to your volume of sales as well, outside of that physical presence, that actual economic threshold that you're hitting. And those will not be $0 returns if you're selling multi-channel. You will have actual sales tax that you're remitting to the state. But those Amazon orders do need to be aggregated on that report as well as part of the gross sale, just with $0 of tax.
Historically, when I go into Seller Central and I start pulling sales data, sales tax data, often it's confusing because Amazon doesn't make a lot of historical data available for long periods of time. So I'd love to hear a little bit more of your thoughts in terms of best practices for a seller who's trying to keep track of things and doesn't necessarily do this on a regular basis. How do you see sellers being able to keep on top of their data when they're operating with whatever's available today in Seller Central?
Yeah. So one thing they're going to want to do, because the look back window for audits is 7 years. So you've got a window of time there that you are essentially at risk of being out of compliance if you don't have that data. Like you mentioned, a lot of the platforms, they either charge you extra to go back and get that archival data, or they just don't have it available. They'll wash that data out. So as the seller, I mean, that's your responsibility. If you need to download reports, do so. Make sure you're aggregating and keeping that in a safe and secure location. So you have that all, TaxJar we do track archival data. So we have the lifelong account all in there. So they have a filing history. And it's all there in a clean space. So we find, sellers that use our platform have a really clean record. But if you're not using a third party, make sure that you're on top of that, because you're putting yourself and your business at risk if you're not keeping that data for up to 7 years. And you want to make sure it's secure. Data security is a huge issue nowadays. And you don't want, archival information like that could really essentially show the entire sales of your business to be exposed.
So as I mentioned earlier, 5 years ago, my business partner and I, we set up an LLC. We registered in, at that time, only 25 states, just to see how complicated the sales tax process was. We sold a grand total of $0. This was never meant to be a sales effort. It was meant to be let's see how messy things are across 25 different states. And so the process of having every state do things differently created a little bit of a nightmare getting all the paperwork to states, even when you only had, we had $0 of sales. All of that as background. I'd love your thoughts on how does a seller simplify its life around sales tax compliance when the seller is actually thinking they're going to be selling across the country. I'm a new seller. I'm getting started. I'm planning on going big. How proactive do I have to be versus retroactive when it comes to thinking about sales tax?
Well, my boss always likes to say, where did you sit in the class? Did you sit at the front of the class? Did you sit in the middle, or did you sit in the back? Now,
there's a cost to sitting at the front. Let's be honest. There is a cost.
There is. So there's always that cost versus risk analysis that, again, where did you sit in class? Are you okay with that risk versus the potential of being audited and having to pay, fines and interest for any, unpaid or overdue tax returns?
Yep.
So I think it's really, we obviously always advise to stay compliant if possible. But like you mentioned, this is a huge burden, especially if you're a smaller, newer seller. You're just testing out the waters, aren't sure what your sales exposure is going to be. But Amazon with those warehouses just immediately adds these requirements in more states than you think right off the bat due to their physical presence across the country. Sometimes they're moving your goods from warehouse to warehouse. It's not even in one state. So, this is important information to not only track and keep compliant and on top of. I don't want to toot our own horn too much. But that is why folks come to us. I think if you are trying to file returns in 25 states in that case, they all have different deadlines. They all have And like Florida, you have to get it in a few days early because it's not going to hit right away and it's going to take days to process. And you can try to make your own spreadsheet and keep this all going, but it's going to drive people crazy. And we've had companies come to us that have been doing it manual and it just gets out of control. I'd say after 10 states, they want to wash their hands clean of it.
Right.
So there's no magic thing. I think it's, if you want to spend the money, get a solution that really can automate it for you. Otherwise, you're going to spend the time, and really you're going to have to weigh the time versus the risk, and also the time versus the reward of just having something that automates it for you.
So just to give our audience a little sense of cost here, we used a service to actually process the paperwork, but most of the fees we were paying were actually fees to the different states just to make sure that papers actually got submitted. And when it was all said and done, we literally spent $12,000 or $13,000 just to file $0 papers, which is insane. And when you think of the small Amazon seller that's saying, let's see if I can make a go of this. Maybe it's a hobby, maybe it's a side deal. Eventually I might turn it into a real job, but boom, $10,000 of filing fees. Holy smokes. You need to be pretty serious about doing the right thing if you think that selling on Amazon is really going to be an experiment. Again, I know you say, where do we sit in the class? How much risk are you willing to handle? When you think about some of the minimum volumes that you have to do into various states before the states get interested in you, how do you advise clients around, spend $10,000 right away in your first year when you're selling $500 a product, or absorb certain levels of risk, knowing that you may get paperwork from someone saying, we think you sold $25 in our state, you owe us some money plus penalties, fees, and so on and so forth. It's hard to see how this works for a really small seller who's getting started.
I would say, from what I've seen anyway, the small sellers, they normally don't want to take on the cost right off the bat. So they will take care of the bare minimum. What is it? Okay, I'm located in California. I need to get registered and file there. They might step stone into it. I also have had ones that have reached out and they just want to get compliant from day one. I think more and more, especially with this pandemic, just folks are moving towards Amazon sellers. There's almost like a network, as you know, of people that now will connect and kind of get friends in on it and tell them that they're making extra money on the side. But I think you really need to know what you're getting yourself into from the get-go. If this is something you're serious about, just know that you're going to have this exposure and risk. And are you comfortable taking that on?
Yeah.
And weigh, at least at the bare minimum, if you're located in a state, that's probably the bare minimum of what you should be doing as far as tax compliance. But
filing for your own home state. Sure.
Yeah. If you want to be completely compliant and you want that peace of mind, it's just, we don't have a crystal ball. We won't know how much those fines are. And it's almost like kicking a can down the road. Do you want to spend the money up front, or do you want to pay it later? And it's a question mark what the later cost is. So, yeah.
We used to run a conference called Prosper Show for Amazon sellers. And we had someone come from the Multi-State Tax Commission, and he presented and talked about some of these sales tax issues and some of the opportunities that states put in place where they'll waive periods where you can come forward and declare, okay, I've been non-compliant. What do I do? How do I come clean? I remember looking around the room, and there was about 1,500 people. There were grown adults crying because they realized they're damned if they do and they're damned if they don't. If they don't take advantage of some of these programs, then, as you say, they're kicking the can down the road a little bit further. If they do take advantage of these programs, these amnesty programs, they're all of a sudden stuck with tens of thousands of dollars of bills on stuff that they never collected those dollars to begin with. So it's purely taken out of pocket, out of past profits to become compliant. This concept of, if you've done wrong in the past, even if it's unknowingly, how do you get to the point where you come clean when it's going to cost you so much that, quite frankly, you may no longer be in business just by becoming compliant?
Sure. And I think that you're talking kind of about those voluntary disclosure agreements.
Yes.
Come forward, let them know, I know I've done wrong, I've been bad, I haven't followed the rules, let me try to get this right. Those, obviously the state likes to position it as a win-win. They're becoming aware of a taxpayer that wasn't paying taxes in their state. and hey, you're getting compliant. But ultimately, like you said, then that comes with a big cost. Because especially if it is where they were not the ones collecting the sales tax, so they never had it in their pocket to pay it out in the first place. So that's just completely coming out of the profit of their company at that point. Yep. So I mean, it's still just kicking the can down. If you don't do that, if the state comes after you first, though, it can be a lot worse. They just need to know that. So, we all don't want to go to the dentist if you've got a toothache, but if you just keep letting it hurt,
that's true.
It's going to get worse. There's going to be 20 other problems that are going to pop up. So I think if you've done wrong, it's preferred that you get on the right track, but make sure that there is a cost involved with that, and that it's not, they're not just going to say, okay, great, thanks for letting us know, and then shake hands and say, just pay moving forward or just file moving forward. They're going to definitely incur fees and interest on that.
So let's shift our discussion to compliance sellers. Mm-hmm. I have a lot of interactions with sellers who did do the hard work of getting filed in all the right places. And even when they are compliant, they still have states coming after them left, right, and center, sending them paperwork saying, we believe you owe us a ton of money. And what I'm seeing over and over again is some of these really aggressive states, quite frankly, they've never bothered to cross-reference. They're just sending paperwork scaring the living daylights out of sellers when there's no debt that's owed. But, let's just see what happens. I'd love your thoughts on, are there specific states that you're particularly aware of being more aggressive than others that sellers should be on the lookout for? And again, we're talking compliant sellers. You're doing the right thing, but you're still getting bombarded.
Yeah. I mean, I think Pennsylvania has always been a forerunner in that. Washington and California typically are pretty on top of it. Massachusetts is up there too, as far as coming after those sellers. I mean, I see it in, the Amazon FBA kind of Seller Central. There's always folks posting in there, but like, I don't understand. I've been paying all along. And then there's just a bunch of comments that you can read in threads about these sellers just saying, just ignore it, or just don't answer back. So it's not great that the states are pretty much just blanketing, but from what I've heard, the states are pretty much getting information from Amazon as far as whose goods were held in that warehouse. They're, like you said, not cross-referencing, see who already paid. They're just really blanketing out there and seeing what they can get. So they're casting a wide net. Honestly, like I said, that's why that's important to keep that paperwork, keep those returns, keep everything recorded. Because if you have your defense ready to go, if you bring that to a tax advisor, they can look through it and let you know that you don't have to pay that, or give you some advice there on how to deal with the states. But, I know it's scary to get something like that from a state, because we all know there's taxes out there we've never heard of, or there's overdue property tax you never got a note on or something like that. But with this, it's just make sure you have supporting documentation, because that's the best that you can do to really prepare yourself for a situation like this.
Is there anything beyond paying your sales tax properly that a seller can do to limit the likelihood that they're actually going to get audited in the first place?
It's pretty mixed bag out there on where the audits come from. Mm-hmm. I think especially with these marketplaces and the $0 returns, they're really creating that, or for like exempt customers, they're really cracking down on why are you exempt, and they're coming after these sellers across the board. I know we've seen it here where if we're just giving other as an exemption reason, that's like not good enough for a lot of the states. Now they need details and they need it granular. So I think make sure your staff, be ahead of this, track everything you can. And I don't really know if there's a right or wrong reason on how you can or cannot get audited. I think it would be a pretty mixed bag out there. So best you can do is be prepared for the audit and just have that information on hand.
So let's say I'm an Amazon only seller. Amazon is collecting and paying the sales taxes in all the states where my products are actually stored, sold, what have you. At the end of the day, if I'm not filing the necessary paperwork with the states myself, can you talk me through a little bit about the kinds of fines and penalties that sellers can expect for not filing that essentially administrative paperwork?
Yeah, I mean, that can vary very widely. We're not tax advisors here, so we don't go too deep into those fines. We would typically reference a client over to a tax advisor for a situation like that. But, they can vary widely. And it can really depend on also like the look back window that they're looking at. How long did this go on for? If they were pre-Wayfair sellers, that's a whole other ballgame because there was sales tax that they should have been collecting and remitting. So that can be really hefty there. I've seen ones where they're, $50,000+ of back tax that they did not collect. The fines themselves should not be as aggressive as that for just the not filing, but it will still cost you money in the long run. It's just going to depend on that state. And as we know with the nexus tracking for these states, no state is the same and no situation is the same. Seems like they don't even have necessarily a rhyme or reason behind some of the taxes and kind of fines.
So you talked a moment ago about some of the more aggressive states.
Mm-hmm.
Can you give us a sense of the time and effort that an audit can cost a seller, even one who's compliant, doing all the right things, paying his or her taxes? I keep hearing horror stories from sellers who said, you wouldn't believe what I spent the last 3 weekends doing. And it's just filling out paperwork to demonstrate they don't own anything.
Yeah, that can be pretty hefty time limits. I mean, we're talking about 7 years of transaction data. Like that's every month, that transaction data that you need those returns for. And like you said, there's probably paperwork where it's very manual. You're going to have to be filling in, this was the information for this year, for this month. So it's going to take hours to do this stuff. This isn't like a light audit. I don't think, and audits are so specific. They really, if you're not answering it exactly as they need it, like they'll just keep kicking it back over to you until it's in the format they need. Any government entity we've all dealt with, like their forms, there is no wiggle room with them. They want it exactly as they want. And look, nobody went into business to deal with sales tax. I don't think that's why any seller sells what they do.
Right.
And it's just, it can get very granular with all of these changing rates. There's district taxes, there's county taxes, and it's just impossible. And this, quite frankly, in the past, the software wasn't really up to snuff with all of these taxability codes and with the jurisdiction taxes, and they weren't always calculating correctly. So, these are things that it's just, even if you think you're doing everything right, sometimes the software wasn't reliable or wasn't doing what you needed it to. So you can do the best you can. And that's honestly what we can all hope for, and just answer as best you can.
So Amazon uses tax tables to figure out what taxes should be collected by state, city, county, and so on and so forth. What if Amazon makes a mistake on that? Where can the Amazon seller contest that the wrong tax was collected by Amazon?
Yeah. So I'm actually not positive on that as far as the Amazon seller account. We don't get too deep into their account specifics. I'm sure that's somewhere in Seller Central, but I wouldn't really be the one to advise on that.
Okay, that's fair. With so much of retail now shifting into e-commerce, where do you see states moving their efforts around auditing and pursuing e-commerce sellers? How do you think things are going to evolve over the next couple of years? Let's assume there isn't yet another huge Supreme Court ruling that fundamentally changes things. Just with the run rate of what we're seeing right now, where do you see states moving their actions?
Yeah, I mean, I think warehouses are popping more and more up, especially I'm in the middle of the country in Memphis. We're kind of a logistics hub for the country due to FedEx's location here. So the amount of trade that's coming through this area is insane. And I think those warehouses are honestly going to be a key, and that has been the target for these Amazon sellers, has really been, where were your goods being held in warehouses? So I think that's pretty key. The last couple states that didn't have marketplace facilitator laws, it looks like they're moving towards those. So I think they're all kind of getting on board because they know they're missing out on those taxes and they want them in their pocket. And then from there, I mean, I see it as a ticking time bomb with that 7-year audit window, pre-Wayfair versus post-Wayfair. So if they can go back and actually pull taxes from people that weren't paying them, were remitting them to the state and weren't collecting them either, but should have been, I think that's also probably a time bomb just waiting to happen, because they need to get with that in the next couple of years, or else they'll miss out on that wave, because you can't then have a look back window past it. So that happened in 2018. Most of those laws took effect in 2019. I think a lot of the states, and I think you've seen it as well, have started kind of coming after some of these sellers that weren't remitting the sales tax pre-Wayfair.
The return on investment for a state to hire another 100 auditors and go after e-commerce sellers, it's a pretty good return on investment. So it's just a matter of time before even smaller states say, wait a minute, we've got a good opportunity here to collect more dollars. Let's shift gears. I want to talk more about TaxJar. Talk to me about when you look at the full value proposition of what you do for e-commerce sellers, where do you see yourself positioned? And for folks who know TaxJar as a software company, give me perspective on, are you exclusively a software company?
Yeah, those are great questions. So I think where we really shine, we can obviously work with Amazon sellers. And that's kind of where we started when we were, 8 years ago when this company was formed. We were for those Amazon sellers that really didn't have an answer to the question, how do I get the sales tax filed? You could just pull your reports from Amazon. But what we've really pivoted towards is multi-channel sellers. And that's where the world of e-commerce is now. You might be selling on Shopify. You might be selling on Amazon. Yep. You might sell some goods on Etsy. And so we bring that all together. What we do really well is connect to those platforms so we can report and file. We have rates guarantees around the accuracy of pretty much a pinpoint on a map, the rates. So as I referenced earlier, the rates weren't always 100%. And a lot of the e-commerce platforms out there just use zip codes, which are so-so. They get most of the taxes in there, but they miss some of these jurisdiction taxes. So I think that's where we really shine, is bringing this all together, making something that would otherwise be very complicated, because you might have 4 systems that don't talk. We aggregate that data and make it simple to file. So I think that's where we really shine. We obviously are a platform, but beyond that, we have the greatest service team I've ever seen. We have amazing reviews. We really care about our customers, and we're there to help with even first line of defense audit support and things like that. We really get in there. We have a tax research team that's constantly keeping up to date on all of these tax laws, the rates changes, and really make sure that our product is doing what it needs to do. So there's a phenomenal team that keeps this machine running. And I think you're not only purchasing a software, but you're really purchasing the entire whole of this. If you're trying to do this on your own, we have hundreds of people backing us to get this done behind the scenes. It does everything so beautifully and simply that sometimes people think, I can do this on my own. I think you don't see behind the curtain here. There is so much, and I'm always blown away by what they do on the back end here. So we really bring a lot to it other than that. But I just love the team here, and they're great to work with.
You were recently in a acquisition with Stripe. Tell us a little bit more about what that's likely to mean in terms of the services or the capabilities you'll have to offer.
Yeah, so I'm not sure if you heard, but Stripe also announced their Stripe Tax, which will be bringing more tax to the global scale. That's currently, and I can't speak to the future of that, but currently it's for Stripe customers. So we're still staying multi-channel. We're still very US based doing the filings. I think they saw a need as far as the US sales tax as well. It's something the customers, it's so nuanced here versus international. That taxes are a lot simpler than US sales tax. So for them, they're handling that piece. Hopefully one day, I think our goal is obviously to be a global solution as well for sellers that aren't only in the US. And that's my personal hope as well. But that's hopefully where we now have obviously a phenomenal team and a very well-respected name in the industry behind us. And I'm looking forward to seeing what that growth potential can mean for everybody. But I think we're definitely better together. That's one of our internal slogans. And I think it's only going to get better from here. I think we already do what we do great. They obviously are so well respected in the industry. And I think together we'll just be stronger for just an even wider net of customers.
Ellie, I want to thank you for joining us today on the BuyBox Experts podcast. For those of you interested in learning more about TaxJar, please visit taxjar.com. Join us again next time on the BuyBox Experts podcast. Today's episode is brought to you by Getida. Getida is a global leader in Amazon FBA auditing and reimbursements. Getida analyzes your Amazon data, reconciles your FBA inventory, and files claims for reimbursements on your behalf. No obligations, no hidden fees, just Getida recovering your money. Getida helps you get your money back into your pockets so you can focus on investing in more inventory and growing your business. To learn more, check out getida.com. That's GETIDA.com.
Thanks for listening to the BuyBox Experts podcast. Be sure to click subscribe, check us out on the web, and we'll see you next time.